What's up guys? Welcome back to Money Grow, the channel all about making your money grow. This is the 9th episode of my 100K wheel strategy portfolio. I'm filming this video on Thursday, November 19 after market close. So it's been 59 days since I started trading in this account on September 21st, 2020. My net account value, if I were to liquidate my account today and buy back all my open positions, is $103,415. And the cash balance of the account, which counts all the cash collateral I used to open my positions, plus cash from premiums received, is currently at $105,532.18. I made a total of 8 trades since my last episode, and I'm excited to share the progress with you guys. I have a lot of analysis to cover for some of my new stock choices, and I hope you get a ton of value from it. Before we continue, I just want to give a quick shout out to my amazing Patreon supporters, our standalone Crow CEO, Jorge Ledesma, and our 4 Crow investors, Prismatic, Erica, Andrew Paz, and John Harden. Thank you all so much for your continued support. If you guys are new to the channel and you want to be notified immediately after I make a trade in my $100,000 portfolio, please consider supporting the channel on Patreon. I post all my trades on there so you'll be the first to see them. Link is down below in the description. Another easy way to help out the channel is by clicking my 3 different referral links so we can both get free stocks and free cash. For a limited time, Webull is giving away 3 free stocks, M1 Finance is giving away $10 in cash, and Robinhood is giving away a free stock like Apple or Facebook or many others when you sign up. Links are in the description. Thank you guys. So let's jump right back into my portfolio. I started this account 59 days ago with a clean 100K, and you can see I now have a cash balance of $105,532. That excess amount is all premium I collected from running the wheel option selling strategy. If you don't know what that is, please watch my explanation video. I'll attach a card right here so you can click and watch. On the screen now is the spreadsheet that my friend made for me, which helps me track a ton of useful information. I'll leave it on the screen for a few seconds, but please feel free to pause the video if you'd like to look at it more thoroughly. I've also left a link to it in the description so you can make a copy of it and download it for your own use. And don't worry, that basic template is completely free. However, if you want access to this exact version that you're seeing now, I update it after making my trades, and I'm granting viewing access to all my level 8 and up Patreon supporters. So if that's something you're interested in, please consider supporting the channel on Patreon. Thank you guys again. This is the front page of my Webull account where you can see all my open positions. And again, I'm recording this on Thursday, November 19th, after the market closed. I'm currently using $104,350 of my available cash balance as collateral, which translates to being 98.79% of my total cash balance. That leaves only $1,282 remaining, which I plan to keep in liquid cash to be able to buy back any of my contracts that present decent opportunities when closing them, whether at a deep discount from the premium I initially collected, or if I want to free up some cash because I see more attractive puts to sell. I was definitely a little more aggressive this time than usual with my new strike prices for these new contracts that I opened, because I'd actually like to be assigned some shares, and I want to boost my gains in this account by being a little more aggressive. That doesn't mean I'm selling in the money to force that event, but I'm selling puts with smaller downside buffers to collect larger premiums and have a better chance of being assigned shares. If you guys enjoy this type of content, I would really appreciate it if you like the video and subscribe to the channel. Thank you guys so much. So let's continue where we left off from the last episode. We're now on update 61 for my Patreon updates. FB Facebook. I've sold puts on them previously, and this time I had a similar thought process. They're relatively expensive to me currently, but I do feel like I always want to have a position in Facebook just because I'm such a strong believer in their current and future earnings potential. They're still one of my favorite stocks based on value and growth. If you guys are new to the channel, I try not to become redundant by going over my thought process and the financials of the companies I'm choosing if I've already done so in a previous video. Unless, of course, there's been a significant difference since my previous analysis. So if you guys are interested, I explain my thought process for choosing Facebook and analyze their financials in episode 5. Update 62 is Realty income. This trade happened last Friday the 13th. I could have been patient and most likely bought the contracts back at $5 each on that day or during this week, since throughout that day last Friday a few of those contracts did execute for $5 each, but I wanted to expedite the process and free up my cash collateral as soon as possible in order to use it in a new play. In update 23, I sold to open 2 puts for $125 each, $250 total. I was able to buy back both for $10 each, $20 total. I held those contracts for 39 days. And I explained my thought process for choosing Realty income and analyzed their financials in episode 3. Update number 63 is BYND Beyond Meat. This one is a brand new stock on my watch list that I'm pretty excited about, and it's definitely a riskier, odd one out play relative to my usual picks. It came on my radar when it dropped over 20% following their recent earnings report. I feel like they're positioned properly for a rebound whether or not shutdowns are put in place. Their previous quarter before this negative one saw tremendous sales and demand, a large part of that being from people stockpiling meats. They're feeling the pressure of having a negative quarter, but I feel like their momentum and eagerness to fight through the struggle and succeed is 100% there. There's even talks about a partnership with McDonald's, which I believe would send this stock completely skyrocketing, but I'm not necessarily banking on that. I like their product and their mission, and this strike price is a nice entry point for me. As far as their stock price and financials, they're up over 4% in the last week, but down 27% in the last month. Even after that drop, they've still added an enormous chunk of market cap this year, being up over 68%. Capital structure shows a well-managed ratio of debt to cash and a relatively small market cap for the reach and vision that this company has. Income statement shows a mountain of revenue, very nice gross profit, but unfortunately a net income loss due to their hardships we've been facing this year. I do believe this is a temporary hurdle that they'll quickly overcome and rise to growing profitability within the coming years. Profitability shows that nice gross profit margin again, but reveals its shortcoming with their net income, which explains why their stock is where it's trading at now. Beyond Meat currently doesn't pay a dividend, but that's fine, they're a growth company. Valuation does show that Beyond Meat is still very expensive from a price to book standpoint, but with their growth potential, it kind of makes a lot of sense. Beyond Meat has the first mover advantage of being one of the first massive plant-based food companies that is becoming an innovator and household name pretty quickly. They're getting their name and product out there, and they're doing a great job at that by exposing themselves to the possibility of becoming a staple partnership with food giants such as KFC, Subway, Dunkin' Brands, Blue Apron, Tim Hortons, Del Taco, A&W, TGI Fridays, Carl's Jr., Pizza Hut, Starbucks, McDonald's, and so many more. On their website, they show these graphics that show all the different companies they're in partnership with, and they're looking at partnering with so many more. Sure, they might not have a fully established relationship with all those giants yet, but the fact that they're open to a partnership and many of these companies are testing the products in select locations is phenomenal news for Beyond Meat. Just as many retail businesses needed to adopt tech in order to remain competitive, I'm predicting many food giants will need to adopt plant-based meat in order to remain competitive as well. According to an article by Markets Insider, some analysts believe that Beyond Meat could reach a market cap of $140 billion in the next decade, which is absolutely mind-boggling. With their current market cap of around $8.4 billion, that would imply a growth rate of 32.5% over the next decade. So in other words, for every $1,000 you invest in the company today, some analysts believe you could have $16,678 within as little as 10 years. Obviously, that's not guaranteed. It can be much higher or much lower, or Beyond Meat could just flat out go bankrupt. Nobody knows for sure. But based on the potential, I think it's a risk worth taking with a small chunk of my portfolio, for me personally. Update 64 is KR Kroger. In update 31, I sold to open 3 puts for 61 each, 183 total. I was able to buy to close all 3 for 18 each, 54 total, after holding for 41 days. I explained my thought process for choosing Kroger and analyze their financials in episode 3. Update 65 is O Realty Income. I've sold and bought back several O puts since I started this account. O is my absolute favorite monthly dividend stock with real estate exposure. I expected them to rally harder as another REIT with the ticker symbol FRT did on positive vaccine news, but they're lagging behind, and I'm taking advantage of that fact by selling near the money and collecting more premium. This time I'm only giving myself a 4.64% downside buffer for this play, but getting assigned is fine by me. I explained my thought process for choosing Realty Income and analyze their financials in episode 3. Update 66 is CVS Pharmacy. I took advantage of Amazon revealing that they're going into competition with brick and mortar pharmacies as an online prescription delivery service. Although I do expect that to be huge for Amazon, I think the 9% drop in Walgreens and CVS that they had on the day I opened these contracts was a bit of an overreaction. I personally like CVS more than Walgreens now with their new discounted share price. And just a fun side note, this is update number 66, and these contracts executed while CVS was trading at $66.66, which I thought was pretty funny.
Execute Order 66.
If we take a look at their 1-year chart, they're down 11%, and over the past 5 years, they're down a whopping 30%. Their current price is definitely a good value in my opinion. Capital structure reveals the elephant in the room, which is their giant pile of debt that they need to tackle. They took on most of that debt from their purchase of Aetna a couple years ago. According to this article, their debt interest rate is at a very low 3.26%, and I'm a fan of utilizing healthy, cheap debt in order to leverage that money and earn far more than that interest rate that you're paying. However, when you're levered up 2 times, which is true for CVS right now, that debt starts to look very frightening and can pose a massive problem if their revenues suffer. Income statement shows an absolutely incredible $265 billion mountain of revenue, but unfortunately only 3% of that number is net income. I'm confident that they can bring that number up as they have similar growth strategies like Walgreens does, but the huge differences are the smaller workforce overhead and much healthier PE ratio compared to Walgreens. And they've achieved those better metrics while having a market cap more than twice the size of Walgreens. That's very impressive to me. Profitability exposes my critique of their minuscule net income margin, but I believe in the growth that lies ahead. Dividends show an attractive yield of 3.01% with a nice 5-year growth rate of 12.7%. Unfortunately, they haven't raised their dividend at all from 2017 to 2020, but it's still very decent. Valuation shows a low forward PE just under 9, which is great, and a price to book of 1.26, which is also a nice value. Update 67 is DIS Disney. With Disney's shift in strategy from being a value play to a growth play, they're already becoming a force to be reckoned with in the streaming space. They own so many recognizable household brands that they can spin off into new movies/series. Even with their park profits suffering greatly due to closures, that's only one portion of their income, and eventually they'll be able to reopen and boost their revenue significantly. In the past 5 years, Disney's stock price has remained relatively stagnant, and now with their enormous Disney Plus subscriber count, the cutting of their dividend in order to reinvest in content and growth prospects, and the fact that their park profits are at extreme lows for the time being, I think we can all agree Disney is a much different company than it was 5 years ago, and their future looks quite promising. I covered my new bull thesis for Disney in this episode, but I explained my thought process for choosing Disney and analyze their financials in episode 3. Update 68, AT&T. AT&T has been teetering between $26 and $33 since their drop in March, and I believe they're still greatly undervalued, being down over 20% in the last year. I was only able to sell 1 put because that was all the cash balance I had left. Except for the $1,282 that I explained earlier, I plan to keep in liquid cash to be able to buy back open contracts. I explained my thought process for choosing AT&T and analyze their financials in episode 3. So those were all 8 trades I made since last episode. I was successful in my goal of using the majority of my cash balance this week, which I'm really happy with. Subscribe and stay tuned for next Friday's episode. I hope you guys enjoyed my 9th portfolio update with a bunch of great trades. If you have any comments, questions, or suggestions, please comment down below. I'll be reading every single one of them. And be the first to see all my trades on Patreon. Get your free stocks in the description below. Thank you so much, guys. Thank you guys again for watching until the very end. I hope you'll be back for future videos. And as always, please subscribe, hit the notification bell, like, and comment. Have a great day, and I'll see you guys next time.